Righty, welcome to Stockradar Stocks on the Move for another week. Today's date is the 4th of September 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, another good week apart from yesterday, but that's just one day, so we'll have a little bit of a look at that. But generally, what I want to talk about is portfolio control drive consistent returns. Regardless of the market, we run portfolios that perform, and inside I'm going to review some of them for you today to have a look at it. But let's first go to the trend intensity ratings today and see what we've got. Well, there's actually quite a few of them. If you have a quick look here, here we've got a whole heap of 10s, 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 and 9s. So there's a lot of trend intensity ratings over the top 10, but here's a few of them. Qantas we know, which has done really well, reported really well. Some of these smaller miners have jumped again. Capricorn, Catalyst. We've got GDPG there. Harvey Norman's made new highs. LTR, Liontown is also doing okay. MP1's broken out a little bit again. 360 keeps it going. Newmont's been a beautiful performer in the gold sector for us. Neuron has just broken up recently, and NAB is one of the banks that's doing really well. Just hit banging its highs this week, came back off it yesterday. Interesting times, and we'll have a good look at that. We can have a look at it now actually. NAB really just hit, this is the old high here, going back to 2000 and whatever it is, a long time ago. We hit this high after this little breakout here, and we've come back yesterday, but all things are pretty good. Good volume, good momentum, above the average. We just really need to push through this R1 level now to get to that new highs, which is looking pretty interesting to me in some of these banks. So that's NAB for you at the moment. Okay, now stock pick count itself. Stock pick count itself up 5 this week to 68 stock picks. So we had a few new ones in this week. In fact, we had 7 new ones and 2 we took out this week. So that's all been pretty strong. 68 picks of 160, good breadth, and you can see from the ratings of 10s and 9s there that I just showed you, there's plenty of our stocks doing very nicely at the moment. Okay, let's have a quick look at portfolio review updated of yesterday. The conservative portfolio is actually very, very strong. It's 9 out of 10 stocks, which is very high for that. So it's 90% equities, 10% cash, and it's running along at 11.2, which is the high end of its parameters. It's usually running between 9 to 11, something like that. So as the market's quite strong, it's at the upper band at the moment. Our Energizer 5 is kicking along really well. 5 out of 5, 100% equities, no cash, 18.6% at the moment, CAGR. Then we've got the Energizer 10, also full, 100% equities, running at 14%. Then we've got the 2 more recent Energizer portfolios. The one I started in August 20, it's full and it's running at 13.9%. And the one we started in March 21, 3.5 years ago, is running at 18.8 and is kicking high, very much higher indeed. Some of those stocks we've got in there at the moment in our Energizer 5 stock, things like Sigma, Linus, Newmont, we've just added Worley in there, so it's doing pretty well, that group. So the portfolios are doing well. This is where our control is. This is where we control our sector limits. We control the size of our portfolio, the size of our holdings, all this sort of stuff, fully controlled, so that we don't get our own mind involved in it too much. We just follow the guidance of what our stock picks do and our portfolio controls do. So that's what we do with there. Okay, so let's go to the overseas markets now. Again, not a lot of change in the indices. They're doing pretty well at the moment. The Dow, as you say, has made new highs. It's looking fine. All the volumes are good. The momentums are all good on all these indices. So there's really no real concern about any of them at the moment. No turns, nothing there. So all looks pretty good. And there's the Nasdaq, which I think has also kicked up pretty well last night, bouncing again. So they have a little correction, they bounce again, and that's a definition of an uptrend and a definition of a bull market. So high highs and high lows, and we've had a pretty sharp move in these indices in our market as well since April 2025. So for the last few months we've gone along pretty strongly, new highs and off it goes. And we look at our market as well. It did get a bit of a hit yesterday from the interest rate thing, and I think also probably maybe a little bit of an opportunity to take some profits on some of these stocks that have been running along so well at the moment. But one day does not make a market. We're going to bounce again today. Let's see how we go. For the moment, the momentum is very good in our market at the moment. And again, that is, we've seen these bands banks again really kick this index higher again as they run along quite strongly, and a couple of other stocks in that top 10, top 20 group of stocks that basically dominate this index. Okay, gold again. So we're not getting a lot of change here for me today. There's not a lot of interesting things to say, but gold has made new highs and is pumping along pretty well. Copper's really doing very little at the moment. It's just recovering a little bit, not giving us much. And Brent's the same sort of thing. The pressure is down, downtrend. Nothing really has changed there. So that's our indices and our commodities at the moment. Not a lot of change. So let's now get into some stocks. Firstly, we'll go to, we'll have a slightly better look at NAB here, which we did look a minute ago at. You can see these highs here. It's at, if we go right back here, you can see that old high is, gosh, it's a long way back. This is going back to 2008. That's right. Okay, that's where we are. So a long way back. But now we can see this big move here we've seen recently. It's really kicked high nicely. We've had some good volumes coming through here, some great volumes pushing these markets higher. Momentum's been fantastic. We just bumped into this high now. I'll be so excited if we do see it move through that, because it really does, to me, herald probably a new era for these banks, having not made a new high for 15 years. In NAB. Okay, I know CBA has, but the other ones, Westpac and ANZ, are also looking good and looking to challenge some highs. I think also Westpac's very close as well. So those banks look very interesting. Okay, let's go to Newmont now. Okay, Newmont. Okay. So we can see this one here clearly. It's been trending up very nicely since sort of early 2024. We had a bit of a blip here. It's recovered, made new highs, and off it goes again. It's been really been a stalwart. There's certainly been a bit of a move towards the lower risk, the bigger stocks here for Newmont. It's done very well. We can see the volume here. If I just get rid of this bit of volume here, we can see there's some nice green bars through here. Good momentum, all kicking this market very much a lot higher. So it's looking pretty good, Newmont, for continue to rise. The trend intensity rating is 10 there. Okay, I'm going to go through a few new highs today. The next one we've got is AP Eagers, which has been a beautiful chart. We've seen the break to new highs back here. The stock broke to new highs, came back, found support at the old high, and then really has rallied. I'm showing you this because every now and then one of these stocks are going to do this. Some of them are slower to start. The lottery court's been a bit slower to start, although it's done quite well. But this really has rocketed. It's not a huge yield or anything like that, but the demand for Eagers Automotive has been unsatiable of late. So we've got a new all-time high here, and it's actually risen from 17 to 28 bucks in a very short period of time. So that's been a nice little learner for a couple of people there. We've got some good volume here. Momentum's good. Some of these stocks, volume is a little bit hard to read because there's just an absolute scramble for stock here, and people just can't get enough of it. So they have to keep bidding up to get more stock there. So Eagers Automotive, we're following that with a nice and tight stop there because we want to make sure we make the most of the profits we've got here from Eagers Automotive. Because it's been a while for this one, but all of a sudden, as you can see, these new highs, they trigger these moves quite often. Okay, Harvey Norman's another one which has been rallying strongly for quite some time. I've just got to get it up there now. Okay, Harvey Norman. There we go. Okay, so we've had a couple of trades with Harvey Norman since the lows at around about $3 or just above $3 there. We had a small trend reversal here in a trade, then it went sideways for quite a while. Then we had a new high back here in January 25, okay? And it's held well. It then pushed towards new highs, and again we can see the appetite here for once a new high is created, that the buyers are also all over this stock. Volume's going up. Doesn't show a huge amount of volume here, but you can see it's quite solid. Momentum's good, moving average is good, and the price rally is very good as well. So it's making new all-time highs, which is a fantastic thing, and we love them. So there's plenty of stocks doing it, and all you got to do is buy the new high and work with a stop, and we've been making some good money of late. Okay, Coles is another one. Again, we talked a bit about the Coles Woolworths situation. Nobody really understands it, but Coles are certainly outperforming Woolworths, and Metcash is also doing very well. well. But we see this huge response to the profit report there, and Coles really has gone very well and it's held those gains on quite nicely. And if I just squeeze this up a little bit, you can see some great volume has come all the way through this whole rise, which looks fantastic. Momentum here was very strong here and came back quite quickly, held above the 0 level. This held above the support level, the old high, and then off it went again. Trend intensity rating of 10 for Coles. So again, really keep it fairly simple. Don't worry too much about this, that, and the other thing. Just focus on the things that matter. And to me, there really is just price action, volume, moving average, and momentum. And that gives me what I need to make the decisions that I do. Trend intensity rating of 10 for Coles, and it's doing very well as well. Brambles is another one which I've talked about for a while. I show these things because it's important, because there's not a lot of stocks going up, or there's probably 2/3 that aren't going up and 1/3 that are from our data universe. But some of them, they go up, make new highs. This one here made a new high, and it's just trended up and up and up and up with very small pullbacks the whole way through. So we don't know what's going to happen, but if we work with a plan, follow with a stop, we will get onto these as we have with Brambles. We actually had to buy it here because it was a big jump in the break here. So at about $18 we bought it, but it is now nearly $26. So that's fine. So we might have to give up a bit there just to get the signal right. But Brambles has been very good, and we can see some volume coming through here, some red bars coming through here, which means the challenge is on. The sellers are testing the market, but the price is still rising, and that's a really good thing. It means the buyers are absorbing any of the selling there, any of the profit taking, and just taking it higher and higher. Trend intensity rating of 9, and a little bit of a down week, or a little bit of a break last week, so it slowed down a little bit there. But Brambles has been a really good stock for us since middle of 24. Okay, then we go across to, we saw the Lottery Corp, which we followed quite well, but it has kicked high pretty well. Again, we wait for these things to happen, and we know what happens with the buyer-seller relationship. These sellers who have been selling have got to reverse. They can't hold a short position, otherwise they're losing money. And also the weighting changes with the Lottery Corp, so people have got to buy the stock. So all of a sudden you get this abundance of buyers and a shortage of sellers. The price has to do one thing, which is jump on good volume, good momentum. So we had a good signal through here to hang on to this stock here. So we had the new high, we had volume, and we had momentum turning positive there. So the Lottery Corp has now jumped quite strongly. The break was around 520, it's now up around 580. So a good run there. Then we've got a couple of Sandfire I talked about last week. I just wanted to show you this one because it's still working. It's working very hard, Sandfire, but it is making gains. There's this triple top here, which seems to have been broken. We've had some reasonably good volume and momentum here. So we're sort of following this one. Again, they don't always work out perfectly, and this has been a really hard yak, although Sandfire has been rallying for a long time in this sort of uptrend phase. It was just up around here that it just kept stalling for about a year around about the $11 level. It's now seemed to be clearing that through now, and trend intensity rating is 10. So we're reasonably happy with Sandfire. Again, we watch, as long as we've got our stop in place, we're safe, and that's the most important thing, because if you don't have a stop, then you can be in trouble, and you can let your mind control what you do, and you tend to wait, and hopefully things are going to get better, but often they don't. So especially when you get a big move in some of these stocks, whether it's AP Eagers, Coles, Harvey Norman, whatever, they will come back at some stage, and you just got to make sure that the profits you've got to lock those in, because that is the name of the game, absolutely. Okay, now a couple of little trend reversals for you, which have been quite good little ones. This one here, if you can recognise it, is Neuron Pharmaceuticals. Had a big downtrend from 24 down to 10, so it cut itself in half pretty well. Then we got this changing picture here. The trend line broke, the moving average broke, then this reversal level, this old resistance level here broke. So we got confirmation. All the evidence was in this area here. And we've got some nice volume coming through here, momentum turned positive, so we've got the green light to go on this one, and it's been making some pretty good gains since then, and I guess realistically the next target is up around $24, which is R1. So trend intensity rating of 10, another 10 rater, so all things are positive for Neuron Pharmaceuticals. Okay, now the last one I want to show you is Dicker Data, which it's changed its spots. It came to the ASSX 200, which changed things for it a bit, and David Dicker's left. A few things have changed, but it is still a very, very good company. And although we saw a big downtrend here, which happens from $12 down to about $8, or just under 8. Then we had a long sideways action here, accumulation pattern. Let me just try and push this volume up a little bit just so you can see that, because that's a huge rally we had last week on huge volume, which was a big change. But if I just squeeze this up a little bit, we can just see there's been some nice steady volume pushing through here ever since this low was hit. We've seen the market start to rally up through here. Volume's been creeping up, then the momentum turns positive, and all of a sudden we get a trend reversal line here through our downtrend line, through our moving average. We get high lows through here, and then it moves up quite strongly. So we've now to move this week up to 977, which is pretty good. Trend intensity rating is 6, hasn't gone positive yet. It will next week as the momentum indicator starts to turn completely positive and move above the zero line, which is important. So that's ticker data. That'll get a good rating next week, provided we finish the week strongly, which it looks like it's going to. Okay, so that's the stocks for you today. I just want to talk to you about the new highs, a couple of trend reversals there. This is the market where you make some money, and you've got to make sure you're in it to win it. So it's a very, very important thing that you do, because the market's not always like this. Okay, so the next thing I want to do is just go into a little bit of talk about why we need systematic control. We need it because we know that our own ideas, our own emotions can get very distracted, and they don't really match the physicality or the way the markets work. So we've got to make sure we have controls to make sure we trade well. We choose the right stocks. We choose the balance of stocks. We don't hold too many. We can't control them. All these sort of things that I put in controls for myself to make sure that what I'm going to do is make the most of the stock picks that I have. And you'll notice that I have 160 stocks. I have 68 stock picks, but my portfolios perform better because they are focused on high conviction stocks. And that's what they do. So we need systematic control, and that's what a trade plan gives you. So you've got the trade plan, which gives you your stock picks, then you've got the actual portfolio parameters, which control the holdings of your portfolio, and that's what I do. So the portfolio side of what I do is very important, and it's growing and growing at the moment, which is fantastic as people start to come on board and understand the benefits of what a trade plan does. So all your portfolio questions are answered without emotion. So all the things, when are you going to enter? How many stocks are you going to hold? When do you sell? Where does your stock go? All these things are physically answered for you, rather than you have to think about these things. And they're all done before the market is trading. So you make all these decisions, and you have your stop set, and then the market moves, and then you either adjust your stop up or your stop gets hit and you get out, whatever it might be. But it's all fully, whenever the market does something, you should know exactly what to do, or your portfolio and your trade plan will tell you what to do. So what data universe are you going to use? How many stocks are you going to hold? What sector limits are you going to have? What time frame are you going to use? What to buy and when, and what to sell and when? All these questions are answered for you, sort of like ticking boxes along the road. Okay, this, yes, whatever it might be. And you end up with stocks in a portfolio like Linus and like Newmont, that sort of thing, and you hold them. Because if they keep going up, we just keep following with a stop. And we've seen what stocks can do when they really want to. They can go up and up and up. So when these questions are all answered simply, clearly, and without question, your life becomes a whole lot easier. You're not worrying, you're not concerned, you're not freaking out because you've got a stop in place. You make yourself safe. You know that you're going to lock in a profit. And again, your expectations are important to understand, that you don't actually say, I'm never going to get the top, I'm never going to get the bottom, because I always wait for a turn before I jump on a trend, and I wait for a turn before I jump off a trend. That's the way it is, because I know that the realities of life, you're never going to get the top or the bottom, so why bother? And why worry about if this market goes higher or not? The most important thing is you making positive returns. Okay, the fact is, a systematic approach without emotion is more likely to provide you with consistent results. That's the upshot of all this stuff of using a trade plan and using portfolio controls. Okay, so I just want to talk a little bit about that today. If anyone's interested in the portfolios, please give me a call, or you can sign up on the site. It's a very simple thing. I'll provide you with a purely logistics email explaining exactly how it works. You get emails on Sunday, you execute on Monday, and that's how you do your trades. It's all very simple. It takes about 15 minutes a week. It's simple, easy, low cost, and safe. Okay, so that's the portfolios today. There's my disclaimer. And then, of course, my homepage there. So that's a little bit about it today. The newsletter came out this week. I'm going to change the format a bit over the next couple of issues. I'm going to fine it down a little bit just to get to more to the nitty gritty of the hot stocks. We'll talk about that a bit later on. So you can trial it. Go to my trading center, take a 2-week trial, have a good look at what I do, see how I'm moving, see what I'm doing. Not always right, that's for sure, but more often than not, thing is what I play. I play the odds of being right more often than not, and it's not that hard. It's just quite an easy thing to build a trading system that works. The hardest part is implementing it and following it, and that's why I try and help people as much as I can, educating you on the importance of saying, yes, I'm going to buy this, and yes, I'm going to get out of this, whatever it might be, no matter what you think. Okay, so put your thoughts and emotions aside and let your trade plan guidance and portfolio controls steer the ship. Okay, this will lead to consistency of returns, which is really important. Okay, all right. Look, I hope you're doing well in the market at the moment. It's a fantastic market. Hopefully there'll be a bit of a bounce today for us all. We'll see where it's all at. But thanks very much for watching. I hope you enjoyed it. Remember to watch your trends, heed your stops. Always keep it simple. Always have fun. Stay safe, and I will see you all next week. Thanks very much.